Good morning, everyone. Thank you for joining the Western Region Economic Development virtual presentation today. We're known as RED. So we're happy to have everyone here. My name is Hercules Cummings, the president of RED, and I have with me Ann Quandy, executive officer. Our mission is to facilitate and promote a vibrant, diversified, sustainable economy through economic collaboration and outreach. The topic for today is the 2023 Oil and Gas Outlook, presented by no other than Lynn Helms. So we're going to dive into just what's in store for us. What are some of the trends, economic impacts, statistical data, what that means for the commodity markets and North Dakota citizens and businesses. As a quick bio, just briefly introduce Lynn Helms. He probably doesn't need an introduction, man without an introduction, but he serves as the director of North Dakota State Department of Mineral Resources. Prior to that, he was also served as a director for North Dakota Industrial Commission Oil and Gas Division since 1998. Now, before moving to Bismarck to work for state government, Mr. Helms worked as a production engineer, reservoir engineer, and asset team leader on projects in Abu Dhabi, Alaska, Arkansas, Louisiana, Mississippi, Montana, New Mexico, North Dakota, Texas, and Wyoming. And he earned his bachelor's of science in engineering from South Dakota School of Mines and Technology. Now, before I turn it over, we will mute everyone. There's a lot of topics to cover, 6 topics. And we will reserve questions at the end of every topic. You can simply just raise your hand, utilize the chat box, and we will unmute you. You can fire away with questions you have for Lynn Helms before we proceed to the next topic. So again, we want to thank you all for your attendance, and we're in gratitude to have Lynn Helms speak on this subject. So without further ado, I will turn it over to Mr. Helms.
Thank you very much, and thanks everyone for tuning in this morning. I appreciate the chance to visit with you. As was stated, we've got a half a dozen topics. I'm going to share my screen here so that we can get started, and we'll pause after we look at a couple slides on each of these topics, and we'll have a little dialogue and question and answer. Got plenty of time this morning, so we don't need to rush through this thing. It's really an exciting time for Western North Dakota, and the resource potential out there bears a lot of discussion and a lot of policy planning, and I appreciate the work that you all do working to build your communities around the resources, and particularly the energy that we have in Western North Dakota. So we're going to start with oil prices, talk a little bit about current statistics so we get a good feel for where we are in terms of Bakken development. I want to talk about what the next 15 years look like. I've been getting some questions lately about, how long is this drilling program that we've got with the 45 rigs, how long is that sustainable? Talk a little bit about our legacy fields and legacy assets, and then we'll take a look at the end about the expectations over the next 10 years in terms of project potential for Western North Dakota. So when we look at oil prices, I don't usually use Al Jazeera as a resource, but I do read what they put out, and this was a really amazing graphic that they put out. The whole point of it being that oil prices are incredibly volatile right now. So what you're looking at here is a graph of all of the nations that used to purchase and what percentage of their oil they purchased from Russia. And then all of the red arrows point to the countries that have committed to eliminate their Russian imports by the end of this year. And the green countries are the ones that are taking up that slack. So you can see that countries like Finland, they got 85% of their oil from Russia. Latvia, almost 100%. Poland, 60%. And most of the European countries a pretty significant percentage. All of them have pledged to go to zero by the end of this year, and that's in progress. The two countries that are taking up that slack are China and India. So the entire supply chain for crude oil to refineries is disrupted. And as a result, any little glitch anywhere in the OPEC plus countries in terms of production or in an economy somewhere around the world shakes the whole thing up. So for example, today, WTI is up $3.40 a barrel. So it's at 91.58. We've been below 90 for a fair amount of time. So we've been having discussions with Moody's and with the experts in industry, as well as Justin Kringstead and myself, about what should the state use in terms of budgeting? What should our budget plan be? And Moody's tells us that if we're not already in recession, we're headed into recession. So oil prices, even though they're pretty significant and strong right now at 91.58, that they should weaken over time. So this initial revenue forecast for the state of North Dakota is planning to use $70 a barrel for the first year and $65 a barrel for the second year, taking into account that we need to have some cushion for volatility in there, and also that we are anticipating a worldwide recession at some point in the next year or two. So with the supply chain completely unpredictable and the world economics pretty unpredictable, oil prices are even more unpredictable. And so I know that a lot of your communities count on this for their budgets. I think the good news when you look at this is that the operators in all the surveys that I've been reading have been telling us that they can continue this 1 to 2% production growth at anything over $68 a barrel. And any kind of substantial increase in activity would require $98 to $100 a barrel or more. So we're in kind of that zone where we can see sustained rig counts of 45 to 55 in North Dakota and sustained growth in production at like a 1 to 2% annual increases over the next several years. So we're in that range, but of course I want to always caution you that with this kind of a picture, we could pop above that or go below it for brief periods of time at any point in time. So that's what we're doing at the state, and I'd be happy to talk about oil prices at this point before we move on to looking at our current statistics. No questions? Yeah. So obviously the state will be making adjustments, probably an adjustment in January and another one in March to the revenue forecast, and we'll know more then, or at least we hope to know more then than we know now. At least by the time the legislature talks with Moody's and with IHS, we'll have seen all of these countries in Europe with the red arrows cut off their Russian imports. I should tell you an interesting little story. John Wrighton, who works for the governor's office, is heading over to Germany. I think it's next week for some type of meeting. And the Germans contacted him and said, for our meeting, no one's supposed to wear suits. We're all going to wear sweaters because of our energy emergency and the need to limit our thermostats. So they're already telling visitors to pack their warm winter clothes.
Lynn, this is Representative Richter. Can I ask a question?
No questions? Yeah.
Lynn, this is Representative Richter. Can I ask a question?
Yeah.
Can you hear me?
Yeah. Absolutely.
I was reading about some philosophy or some strategy of the Biden administration, and so I was reading something by Joseph Tomei, and he basically says that the Biden administration is going to artificially keep oil prices high on purpose to drive up the demand for electric versus fossil. Do you see any stock in that? So that if the prices dip down, of a barrel dips down, do you see anything where the administration is going to do something to keep them artificially inflated?
Yeah, great question. And everything that the Biden administration has been doing is in that direction. So, for example, we're getting ready to file a complaint in federal court over their refusal to hold a third quarter lease sale in North Dakota. And I think there's about 115 valuable leases that are already cleared for leasing across Western North Dakota that they refused to put up for auction. And on top of that, just 2 months ago, they signed a settlement agreement with the Wild Earth Guardians that said, well, even though we leased Western North Dakota tracts back in March, we will not permit wells on those until the NEPA is revised to take into account the social cost of carbon. So while they're taking, I guess, short-term actions to hold the price of crude oil and fossil fuels down going into the elections, all of their long-term actions from Keystone to the third quarter 2022 lease sale have been in the opposite direction, to push the price of fossil fuels up, to make the renewable portfolio more attractive. And when you look at the most recent legislation passed through Congress, both the Income Investment and Jobs Act, or Income Infrastructure and Jobs Act, and the quote Inflation Reduction Act pour billions of dollars into renewables and turn around and penalize the fossil fuels. So yeah, the multi-year strategy is to drive fossil prices up, to make the renewables more attractive. And we shouldn't get distracted by the short-term strategy of emptying the strategic petroleum reserve or calling on other nations to supply us with crude oil to hold those prices down. The reason that we're using what would seem like a pretty conservative oil price is we are concerned about the fact that that's likely to push the world into recession. And so there's only a limited amount of control that the administration has over prices, but everything they're doing directionally is to push the price up. You're right.
Lynn, David Rust here.
Yes, sir.
You state all of these countries are going to wean themselves off Russian oil. Where are they going to get their oil from?
Yes, thank you very much. So that's the interesting supply chain dynamics that we're seeing. We're seeing record oil exports from the Gulf of Mexico. So most of our Bakken crude oil is being exported to Europe. They are switching to Africa and the United States for their oil supplies. And then that's pushing the Russian crude oil and the Middle Eastern crude oil to China and India. But mostly it's going to come from the US and Africa, some from the Middle East. That has driven shipping costs through the roof, among other things.
Maybe a follow-up question to that. I've always thought, once I saw the Bakken crude and it's got to be a high level crude oil. I've often wondered, is it more valuable? Shouldn't it be more valuable than probably what WTI has?
Yeah, that too is a very good question. And interestingly enough, over the decades, our refinery industry had built itself around heavy sour crude oil coming from Canada and Venezuela. Much to their surprise, those supplies are cut off, and they haven't yet retooled. So they're bringing in a lot of waterborne heavy crude oil. You make a good point, because what we're seeing right now is something that we've never seen in my lifetime, and that is the Clearbrook price, Clearbrook, Minnesota, where the pipelines coming from Western Canada and coming together with the North Dakota pipelines, the Enbridge system, collects all of its crude oil and then sends it to Eastern Canada to their refinery hub, and then also to southern Minnesota and Illinois. Oil at Clearbrook is actually bringing about a $3 premium to WTI, because it is Bakken crude oil, and it's what the Eastern Canadian and Illinois and Minnesota refineries want. So we've seen a shift of barrels off of DAPL to the Enbridge system. It's absolutely packed now, because producers are getting a premium at Clearbrook, Minnesota.
Lynn, so that $3 premium is going to producers as well, not just to the person who happens to collecting it at Clearbrook?
Nope, it is going to producers. So we've noticed the smallest WTI differential in history coming out of the tax department. I think twice in the last 3 months, it's got down to $1 a barrel or less, because of the, I think the Clearbrook system receives about 40% of our crude oil. So it's not a majority, but that minority is getting a $3 premium. So smallest differential we've ever seen.
Does that differential take into account transportation costs?
Yes, it does. Yeah, in fact, that's what it's based on, is transportation cost. And so that's the real number that's being received at the wellhead, which also the royalty owners should be seeing. So
that's got to be good news for producers and royalty owners.
Yeah, absolutely.
Thank you.
So let's just take a quick look at some statistics. They're very good. We've stayed at over 1 million barrels a day since we had the problem in April. I'm happy to report that we're just about ready. I think in less than a week, we're going to be putting out the September numbers. And for the first time since last November, we're going to be back above 1.1 million barrels a day. Numbers right now are coming in at 1.117. So we're starting to see the impact of that rig count climbing up to what the workforce will support. So that's very encouraging. And at the same time, industry has maintained its gas capture, obviously not at every well and not everywhere. We've got some trouble spots that we're trying to work with, but we're staying in the mid 90s across most of North Dakota in terms of gas capture. I don't have the September gas capture numbers, and as you can see, these are the July gas capture numbers. September gas is not in. We've identified, I think, 4 areas, maybe 5 areas where we have a problem with gas infrastructure, but as of right now, we've got adequate gas infrastructure to process 94-95% of our natural gas. So that's been one of the limiting factors. Our publicly traded companies are just absolutely unwilling to flare at this point. The reason you see a lot of flares south of Newtown is that's a privately owned operator. The reason you see flares are in the Charleston area that you can see across the lake from Lewis and Clark is that's a private capital company, but the publicly traded companies just restrict or shut in production to avoid flaring. And that, along with the workforce issues, is why we're just stuck in the mid 40s in terms of drilling rigs and in the upper teens in terms of frac crews. Just can't attract workers to Western North Dakota. So that's a conversation we ought to have is what can we do economic development wise to attract workers. And then just wells waiting on completion, it's down substantially. If you recall, it was 3 times this amount at the time of the pandemic. Inactive wells, we keep bringing that down, and we've got a healthy number of completions. So we're actually seeing enough well completions to grow production, and the well count grows every month. So we're going to set a new record in September. That's 17,700 plus operating wells in Western North Dakota. So the statistics all pointing in a positive direction. The downside, maybe that we ought to talk about is, and I've got another slide, excuse me, on gas capture, so we can talk about that later. But workforce is a real issue, and it seems, regardless of what they're offering, they are just not capable of attracting people back from the Permian Basin and from the southern oil development back to North Dakota. So we're sitting here with 10 drilling rigs not operating and no crews to put them in the field. Very encouraging things going on out there, though. I know that you've got the career and technical education programs going at Wilson State College and in Watford City, down in Dickinson. And of course, there's the effort out of Bismarck State College. So this may be something that we're stuck with for a year or two until we can actually train a group of high school juniors and seniors to take these jobs, or maybe recent graduates. What are you guys hearing out there in the economic development world? We just continue to hear about workforce issues and the inability to recruit.
Lynn, this is Dale. The positive thing is our student enrollment in McKenzie County is the highest it's ever been. And so the future of people that will be joining the workforce from our area is, I think, is bright. We can't start them working on rigs when they're 15 is our issue, or 12. We got to wait a while before they're ready to join the workforce. But the same thing, we're not seeing a lot of people necessarily moving, but on the flip side, we're not seeing the ones that are here leaving either, I don't believe, or enrollments would be dropping.
No, that's great information, Dale, and that's what we see too. We're not seeing out migration, we're not seeing inward migration. It's very stable, and everybody's fully employed. So, this is going to require some patience and some funding and some policy decisions to make sure that we are promoting the energy industry to our junior high and high school students, and that we're providing the training they need to become the workforce 2, 3, 4, 5 years from now. So,
Lynn, this is Representative Richter again. Yeah, the same thing at Williston schools. The enrollments are still going up, not as dramatically as they have in the past, but most of the kids, the enrollments are going up at the younger levels. So eventually, 15 years from now or 10 years from now, we'll have a good graduating senior class. But enrollments are staying steady and popular. So that looks good.
If it wasn't for the child labor laws, we'd have a workforce, Lynn.
Yes, well, I keep hearing about situations, with some of the workforce that's out there now, and I know that training them and keeping them working safe is a real challenge. So I think we just have to be patient. We have to make sure, though, that our higher ed system is offering the dual credit programs and things like that. And I don't know, I haven't heard since Mac retired at Williston High School, but is Williston High School continuing with that petroleum class and that education process? I hope so, but I haven't been in contact up there. Those are the kind of programs we need to encourage people to get into technician work, with 1 or 2 years of training. And I've been pushing very hard on Bismarck State College to make their programs sort of a la carte, so that somebody maybe could start out as a pumper or a field hand with a high school diploma, but then take classes in a specific area, not necessarily to get a degree, but to get some training so that they could move up in the organization and do some more technical work. So I think that's taking hold through the technical education program at Bismarck State. Lots of online classes available.
One of the things, Lynn, I don't know, I want to throw out there as a challenge is there are specific jobs that are really challenging to fill. For example, I was told that to become a driller, that's basically a 5-year learning curve to get to be where they really want you to be. And there are certain, I'm going to call them bottlenecks, even if you've got some workforce, are they trained in the right manner to fill those key spots that without them, you don't have a rig drilling.
Very good point. Yep, we were on a drilling rig in the Killdeer Mountains yesterday, and that process has changed so much over the last 5 years that almost everybody's had to be retrained. But they had a great crew out there, and they're now drilling 2-mile lateral wells. So those are 20,000-foot wells in an average of 9 days, which is just absolutely remarkable. So, well, let's move on, and we'll talk about what we see happening with Bakken development over the next 15 years. So we've continued to try to refine this picture. We still are basing it on the underlying geology. I guess that's just our nature at DMR in terms of what we call tier 1, tier 2, and tier 3 areas. And even though these circles, if you were looking at the economics of drilling, these circles might expand and contract based on oil price and efficiencies and that sort of thing. But if you continue to look at them in terms of the geology, so the tier 1 area is the area with the most productive middle Bakken and at least 2 layers of Three Forks. And of course, the rig we were on yesterday was drilling Bakken and Three Forks wells in an alternating pattern. So that area is identified here as the green circle. It's about 80 to 85% developed. There are only about 3,000 well slots remaining in that area. So, and there's currently 30 rigs working in that area. So out of our 45 rigs, 2/3 of them are still working in the core. But the drilling inventory there is declining. It's still good for about 5 years at the current rig count. So there's still a 5-year drilling inventory in that tier 1 area. But the real key future for that area is enhanced oil recovery. And I'll talk about that in just a minute. So, well, and I got a future slide on the tier 2 area. So what's happening in enhanced oil recovery? I left one project out of this because Hess really hasn't gotten the partners yet to get their East Nesson project going. But these are the two active projects. The one on the left is up at Epping. And this is Continental Resources. They're doing a project based on their successful EOR results in the Scoop and Stack in Oklahoma. So they've got two 1280s that they're going to inject a combination of field gas and gas from the WBI system in a huff and puff operation. And that should get underway this month. Injections should be taking place. I think the pipeline is in place now. And so the Buddy and Domingo are ready to go. The other project, I'm sorry, I got those turned around. That's the one on the right. The one on the left is the Liberty project over in Mountrail County on the East Nesson. And they've completed their first cycle of injection and production. They've published an article on it showing that they did increase oil recovery by 3,000 to 5,000 barrels ultimate recovery. That was less than what they hoped for, but in many respects, they got very positive results. They tried something really new. It's a technology that comes from a company called EOR, etc. And these people have developed a computer system, an injection system that alternates slugs of water and gas into the injection well to control the gas, so you get better conformance, and also to reduce the surface pressures. And what they learned in the first cycle is they can get EOR using this system. They can reduce the pressure. They can control the gas migration through the fractures. But the computer injected too much water and too little gas that first cycle. So they're retuning it, and they're going to start their second cycle in January. We're very confident that over the next 2 to 5 years, between these two projects and the Hess East Nesson project, that they will unlock the key to enhanced oil recovery. And I've got a slide later that shows what that means to North Dakota production. But there are 3 companies spending tens of millions of dollars on enhanced oil recovery, and they're seeing positive results at this point. So so we're on the cusp of really opening up that 2-decade plus future for enhanced oil recovery. Little bit of interesting stuff coming out of EERC. They're finding that using pure carbon dioxide is not the best, that it needs to be a combination of produced gas and carbon dioxide. And so there's a lot of research work going into this as well. But the results are very, very encouraging at this point in time. And this is going to mean a lot of long-term production, high-tech jobs across that tier 1 area 5 years from now when it's completely drilled out. When you go to tier 2 and tier 3, based on the geology, these are just tier 2 has Middle Bakken, maybe some Three Forks in some areas. Tier 3 is Middle Bakken only, and the geology is just not as good, plus a lot of federal lands. But again, there's over 20,000 wells to be drilled in the tier 2 and tier 3 area. So over the next 20 years or so, we're going to see a significant number of wells added. Now, there's some overlap in terms of the 5 years and 10 years and 5 years, but we've got about 2 decades of drilling inventory left as we move out. I think the key thing to tier 2 and tier 3 is the new drilling programs that they're using out there with 3-mile and soon to be tested 4-mile laterals. And so we're seeing companies like Grayson Mill and Cord, which is Oasis Whiting in their tier 2 area, and Kraken and Bowline, all those companies, they're planning to move by next year to about 75% of their wells will be drilled this way instead of with the 2-mile laterals. So this is just an image to show you how we respace a 2-mile area into 3 miles so that we can protect the correlative rights, but allow these efficiencies. And the data we're collecting shows that the 3-mile laterals are recovering as much, if not more, per section from the 2-mile laterals, and that the correlative rights can definitely be protected. So the mineral owners can be protected. We're not sacrificing any ultimate recovery. It's interesting, we had one company in a high water area just to the north of here that says the 3-mile laterals, they just don't have the artificial lift capacity to move all that water yet at this point. So we'll see how that pans out. But the main operators north, east, west of Williston are all moving to 3-mile laterals. So that's how tier 2 and tier 3 are going to be developed. So we've reduced our ultimate well count, which a few years ago was anticipating 60 to 65,000 wells, down to about 40,000. That's okay. We're still going to get the productivity out of less wells. So that's what this looks like. I've included, straddle wells and Fort Berthold tribal wells, just so you can see that continues to be a significant number, but not a huge number in terms of the Western North Dakota wells. And when you translate that into production, Fort Berthold stays at about 18 to 20%, but you can see a very slow, very predictable production increase, moving from that 1.1 million barrels a day to 1.4 million barrels a day over about 15 years. That kind of predictability is very helpful to economic development folks when you're trying to attract other industries and deal with housing and infrastructure and all of that. So that's
Lynn,
what we anticipate. Yeah.
You mentioned the straddle wells, so I'm going to interrupt on that one and ask, what has been the impact of our legislation in 2021 regarding the straddle well issue? Has that borne out as far as resolving the challenges there, or is that still yet to be realized?
No, that's a great question, and so that legislation completely quieted the issue, and actually the numbers, the percentage of production that we anticipated when you were discussing that legislation during the session are absolutely the numbers that we've landed at. So about 42% of the production from those 141 wells falls into the straddle category. So yeah, that's been really helpful in terms of relationships with Fort Berthold. I will throw a caution flag. The Department of Interior just designated the Figure 4 ranch as trust lands, and the MHA resolution that dealt with that talks about it changing the exterior boundary of the reservation. So I've challenged the Attorney General's office to review that and see what they think, but that could become an issue. That would create lots more straddle well issues if that happens. And that's over 9,000 acres just on the southwest corner of Fort Berthold. So it would be carved out of, I think, Dunn County mostly, but yeah, that's my caution flag, is we'll have to pay attention to that. What does that mean when the Department of Interior designates those purchased lands as trust land?
If I remember right, our language in the bill indicated within the exterior boundaries of the reservation. So if they expand the boundary of the reservation by doing this, then that would throw these wells into that category.
That's correct. That's why I need to have an attorney general's opinion. So, yeah, so that may be something that I guess, you know, since we have legislators on, that might be something that we start to hear about during the legislative session. And I hope to have some kind of legal opinion before that. So when we look at the North Dakota resource potential, we've just been doing some more work on this. And this is where I said I wanted to talk about gas capture. A little cautionary message here. We have produced 4.4 billion barrels out of the Bakken, and we anticipate 30 billion barrels. So we are a long, long ways from the end of the game. But our problem is that by 2027, which is not far away, our natural gas export capacity, natural gas utilization capacity will be totally filled. And that means both Northern Border and Alliance will be 100% full by 2027. Now, there's some efforts underway to move natural gas to the Cheyenne hub. That can help us, maybe as much as a 500 million cubic feet a day. So that's great news. But the fact is that if we don't find something value added to do with our natural gas, we limit our upward potential by 200,000 barrels a day. So, or limit it to 200,000 barrels a day instead of the 300,000 barrels a day that the resource could sustain. So you can see that as soon as 2027 and maybe even sooner, the gas oil ratio starts to limit oil production and ultimate recoveries. So, you know, we could end up limiting ourselves to 9 billion barrels of oil instead of 30 billion. That's why you hear and see so much about bringing carbon dioxide to North Dakota, bringing value-added natural gas to northwestern North Dakota. And I have a map of what we think that looks like in northwestern North Dakota. So we'll look at that later, but I just wanted to show you what that looks like. So if we can figure out, first of all, how to use some of our natural gas for enhanced oil recovery and the rest of it for plastics and gas to liquids and all of those things, we can ultimately grow our production to 1.4 million barrels a day and sustain that for 20 or more years. If we can't, then as soon as 5 years from now, gas oil ratio starts to limit our ability to produce oil. And the cost to our Western North Dakota economy and to the statewide revenue is tremendous, absolutely enormous at that point. So we definitely are working really hard on solving this problem.
Lynn, if the U.S. increases its exports to Europe natural gas, does that do anything for North Dakota? Is it just mostly a matter of pipeline capacity?
Yeah, great question. So it'll be somewhat helpful in that the Permian gas and the Oklahoma gas will move to the Gulf Coast and get exported as LNG to Europe. That will give us some breathing room in the mid-continent, but we just are completely blocked in terms of access to the East and West Coast to export our natural gas. We have no path foreseeable over the next 10 years to move North Dakota natural gas to the East Coast, the Gulf Coast, the West Coast. And I guess I would say 80–90% of the LNG export terminals that are planned for the Gulf Coast. So it'd be great if we could find a path forward to move North Dakota natural gas to the Gulf Coast. But we just don't have one that we can see fitting in the next 10 years. So we'll get a little breathing room by the Permian gas and the Oklahoma gas going to the Gulf Coast, becoming LNG and moving to Europe, but not a lot.
Say, Lynn, this
Lynn.
is Travis. Oh,
Yeah, go ahead.
this is Travis with Rockwell Automation. In the past, I've worked actually in a previous role on instead of artificial lift, on a gas lift to the Bakken well over by the Iverson Discovery well. And it was fantastic. It doesn't break down. It has all kinds of great positives. I'm not sure if has there been any incentives to work with some of the oil companies to try to invest in more gas lift operations where they could put a scrubber on different units and then reuse their exact same gas they have, to kind of give them some wiggle room to invest in that and see if that would really help. That's question number one. And then I got another question. I apologize, I had to step away for a second. I don't know if this is the right call, but I know UND. Second question would be, UND 2 years ago put together a report on the possibility of extracting heavy minerals out of produced waters like lithium. And I know our company works with different companies on that. There's at least 12 different wells that have, I think the ROI we're shooting for is 100 milligrams per liter. Are you aware of anybody that's either found that lithium's no good, or anybody that's interested in working on those type of operations for that type of extraction on the produced wastewaters?
Okay, yeah. I'm going to save that second question for when I get to my last slide, because you've got a Williston startup that's been funded through CC that's working in that area, and we'll spend some time discussing that. I'm not aware of any gas lift incentives in place. I made a note of that because I've always been a big fan of it myself. When I worked in the industry, we did a lot of gas lift around the Tioga gas plant, and then people went away from it. And I know that the folks up at Epping, particularly the Savannah people, use it extensively and are really, really happy with it. So that might be something that we want to explore. I'm planning to work with the legislature to revise 5751.102.2. That's the gas beneficial use tax incentive, and that would be a great place to insert that if people were able to get some incentive to use gas for gas lift instead of flaring it when they had a capacity issue. So I really appreciate the question, and at this point hadn't contemplated that as one of the possible beneficial uses, but that's great. And we'll touch on the produced water minerals in just a few minutes.
Thanks, Lynn. And if you want, we could have a side conversation later. Maybe I can give you some more specific examples.
Yeah. Okay. Senator Rust.
One of the things that's happening, as you well know, is that natural gas is looked upon very dimly by a lot of people on the East and West Coast. I think Oregon has a ban on new home construction for ranges, kitchen ranges on natural gas. I'm guessing that not long after there's going to come something of a ban on natural gas for heating. That has got to weigh heavily on what we're going to do with that natural gas down the road, doesn't it?
Yes, Senator, it certainly does. And that has been a huge point of frustration. We were within striking distance of an LNG terminal off the coast of Oregon just a few years ago to export LNG and crude oil to Japan, and the local people shut it down. So we continue to explore. There is a potential opportunity as we move this natural gas to the Cheyenne hub and the Opal hub in Wyoming. There are some connections going south that ultimately, and this seems really ironic, ultimately export the natural gas to Mexico. Mexico is building a series of NGL terminals on the Baja Peninsula. So ironically, we may have to send our natural gas to Mexico to get it liquefied and transported across the Pacific. So it's been really, really interesting. As the energy crisis has hit Europe, we've actually seen and observed, I saw some of this data last week, NGL ships that were leaving the ports in the Gulf of Mexico, that their original destination was through the Panama Canal to the Pacific, and they got out in the water a little ways and were diverted east to the Netherlands to offload NGL for Europe. So huge point of frustration, and the fact that we've completely lost the populations on the east and west coast in terms of understanding how natural gas is the reason that our CO2 emissions have gone down over the last 6 years. I don't know if it's a messaging problem or what it is, but you're right, that's going to continue to grow, and we're just constantly frustrated and blocked in our ability to move natural gas to the east and west coast. So if somehow we could break that log jam on the east coast, then we start to see Appalachian gas and Ohio gas go east, and that frees up markets for our North Dakota gas. But as it stands right now, we just think we really need to focus hard on value added within the state boundaries, and we've got a lot of things in the works. So.
Thank you.
Yeah. So when we look at non-Bakken, we don't want to forget about our legacy assets. Exciting stuff going on in Bowman. They started CO2 injections in February. CO2 is coming from Wyoming. They had to shut down some of their CO2 injection and production until they get the recapture facilities built at some of the Cedar Hills batteries. But they'll be getting that should happen by the end of the first quarter, and they should be back up to full CO2 injections by second quarter of next year. So that'll be really our first big CO2 project in the state of North Dakota. And we're working through CC and through the Oil and Gas Research Council. We have a new operator in the Foreman Butte field down there west of Alexander, and they are revitalizing that water flood. So we've approved water injection. They're probably going to unitize next year and go to a water flood down there, and then follow that up with carbon dioxide. There is a pipeline designed to bring CO2 from the center of North Dakota. It's paper at this point, but the design is already penciled out to bring CO2 from central North Dakota, where Summit and other projects would drop it off up to Alexander for a CO2 flood up there. And likewise up in Bottineau County, we have approved water injection into the spearfish up there, and ultimately CO2 would be super beneficial to the spearfish up in Bottineau County. So we're not just working on Bakken enhanced oil recovery, but we've actually got 3 pretty active enhanced oil recovery projects in the legacy assets, and we don't want to forget about those. So that's what's happening. A little bit in McKenzie County. a little bit in Bottineau County, and a lot down in Bowman County. So those economic development people should see high-tech jobs and, you know, some stabilization of oil production and drilling, pipeline construction to bring carbon dioxide into those areas. And when we talk about, and somehow I missed a slide, but the regrow activity, when we talk about that, we're working to support or to sustain those legacy assets. So the first round of funding that we got from the Regrow Act has been to complete what we did under the CARES Act of plugging orphan wells and reclaiming those sites. And that'll get taken care of next year or the following year. The second grant round is formula funding. Whoops. Okay. And the formula funding will continue that work over a period of about 5 years. But I have lost a slide here. There it is. Okay. The really exciting thing that we're looking forward to is the matching grants. So we are scheduled to get about $30 million over a 10-year time period, where we can work with the operators that operate, like Foreman Butte, the Spearfish in eastern North Dakota, the Mission Canyon in Burke and Renville counties, and even, you know, some of the legacy assets in McKenzie and Billings County, where we can match what they spend on water flood or returning wells to production with dollar for dollar matching funds to plug abandoned wells or wells that are no longer economic. So we're going to be able, over a 10-year time period here, not just to incentivize and encourage enhanced oil recovery, but actually to economically help them make those units more stable and bring those units back into profitable production. So things like your Freiburg Medora, East Rough Rider unit, Newburgh Spearfish Charles. Let me think of some of the other units. I guess the Foreman Butte hasn't been formed yet, but there's a large number of legacy asset units that show up on our map for potential for carbon dioxide that we're going to be able to use matching funds. So we've started a series of meetings with the operators of those legacy assets to come up with some guidelines, so that we are very thoughtful and very strategic about how we spend that $30 million. But we're going to be able to invest $30 million of federal funds into sustaining some of those legacy assets around Western North Dakota, some of those long-term producing properties. So that's the non-Bakken EOR and the regrow funding for the legacy fields. Any thoughts or questions in that area? I don't know why Adobe scrambled some of my slides, but we'll get through it. Okay, so I want to talk about energy project potential over the next 10 years, and this slide got out of place. But part of that energy project potential is carbon capture, utilization, and storage. So let's just walk through this a little bit, and I think you guys will find this map extremely useful. So first of all, the initial purpose of our focus on carbon capture was to maintain our coal-fired power plants, which largely are centered in Oliver, Mercer, and McLean counties. The coal-fired power plant north of Mandan is gone now, so we'll have to take that off the map. That was shut down this year and is going to be dismantled next year. But we have 5 major coal-fired power plants at least that we want to sustain. Now, we've got about an 800-year supply of lignite located around those plants. And so we want to capture the carbon dioxide from them and the associated ethanol plants, from our natural gas plants and from our potential future hydrogen hub, and use that. First of all, it's going to go into storage. That will fund the carbon capture projects. So the $85 a ton that was in the Inflation Reduction Act. Sorry, my tongue gets tied on some of these federal legislations. The $85 a ton for storage and $60 a ton for enhanced oil recovery is going to be enough to finance the carbon capture. So initially, probably for a decade, maybe 12 years, while they can collect that $85 a ton, that CO2 is going to go into storage in the blue area there, which is the Broom Creek Formation. Now, it won't even come close to filling that Broom Creek area. You can see it's only 3 gigatons of CO2 over 50 years. But the beauty of that is it's enough to finance the infrastructure to capture the carbon. Now we need over 100 times that, or about 100 times that amount of carbon to fill our storage capacity and to fulfill our enhanced oil recovery requirements. So at the end of that 12 years, when there's no more incentive to store the carbon dioxide, the great thing is we'll have the infrastructure built to capture the CO2. We're pretty confident we will have figured out the enhanced oil recovery processes to use the CO2, and we'll be ready to use that CO2 for enhanced oil recovery. So we've got the capacity to use about 150 gigatons in the enhanced oil recovery in the red areas. Those are mostly the legacy units that I was talking about in, Williams, Burke, Renville, Bottineau, Dunn, Billings, Stark, and Bowman counties. And then
Lynn?
the green area is the Bakken.
Lynn?
Yeah.
How much is a gigaton?
It's 1 billion tons. I have no idea why they switched from BT to GT, but I guess they just wanted to tell us how much it was. So it's 1 billion tons.
So 3 gigaton, that's a lot.
That is a lot. A ton of CO2 would fill a hot air balloon. So if you want to try to visualize it, if you visualize a hot air balloon, that would hold about 1 ton of CO2. So we have enough CO2 coming off over a 50-year time frame to fill 3 billion hot air balloons. That's a lot. We have the storage capacity of 250 billion hot air balloons if we utilize it and store it. So the future for building this infrastructure and for using that CO2 is incredible. We have the ability now economically to build the infrastructure, capture all of our CO2, whether you believe that it's the significant factor in global warming or not. This is an economic opportunity for Western North Dakota that we can't turn away from, because it offers us a 20-year extension to the life of the Bakken and the opportunity to provide storage dollars to the pore space owners in that green area that's going to turn, the Broom Creek Formation, which is worth nothing, into a value-added asset for those surface owners. So whatever you believe about climate change and CO2, this is an economic opportunity that is just too big for North Dakota to ignore. And we don't have anywhere near enough CO2 in the state to deal with our potential utilization and storage capacity. So we really want to focus, over the next decade or so on the economic opportunities that are offered here. And these are high-tech jobs, pipeline jobs, people, watching over injection wells, carbon capture facilities, all of our coal mining and electric generation. Just tremendous opportunities in this area. So when we look at the energy landscape today in North Dakota, this is basically what it looks like. Our number one energy producer is the oil and gas fields. That's the red boxes that cover about 16,000 square miles out there in western North Dakota. That's been your bread and butter for 70 years now, and that is our number one. Number two is our coal-fired electric generation. That's the second largest energy source that we have, and you can see where that's all located. Number three is our wind farms, and you can see that they're scattered around the state, and that continues to grow. Number four is our ethanol plants, and they're really getting on board with this carbon capture and storage. We've got hydro at the Garrison Dam, and I don't know why that star disappeared, but it didn't show up. Acrobat ignored it. That would be located here at the Garrison Dam. And then, of course, we have our refineries, and we have two carbon capture utilization storage projects. I talked about Cedar Hills, and up here we've got Red Trail Energy, which is capturing about 15,000 tons per month. That's our first one, first in the world, state regulated carbon storage project. So that's the current layout. We have one CO2 pipeline. It takes about 2 million tons a year from Beulah to Weyburn, Saskatchewan. And it's going to be an issue of discussion, what the future looks like for that pipeline. But that's the current layout of our energy infrastructure. I've been asked by people, why do we have all these ethanol plants and wind farms? Why not just fossil fuels? And I always like to compare it to a pizza pie. So if you had a pizza and you sliced it into 7 slices, which is hard to do, North Dakota consumes 1 slice of that energy pie, and we export 6 slices. So we can't afford to tell the rest of the world that we're only going to make cheese pizza. If they want meat lovers, or if they want pepperoni, or even if they want anchovies on it, because we export 6 out of 7 slices, we need to be sure that we're facilitating producing that kind of energy. And that's what this picture and the future picture looks like. So we only consume 1/7 of the energy we generate here in the state. And that's why we have ethanol plants and wind farms, so that we can provide that mixture that our importers of our energy want. So it's an exciting picture, but it's nowhere near where we could be 10 years from now. Travis, did you have a question?
I sure do, partner. And I'm sorry to hijack too much of the conversation. I want to let you know that with Rockwell Automation, one of the teams I'm working with, we've been working in EMEA. So that's Europe, Middle East, and Africa. We've actually launched a sustainability calculator. And what it does is it when producers or other folks that when they input the values of energy savings, when they switch from like a soft start into an AFE, or anything dealing with repair, remanufacturing, we've actually got values that have been tested by different European countries that say that if you save this much electricity, or you do different types of, let's say, repair instead of buying new, we actually give you a value of what your what your carbon your offset is by how many kilograms, and up to gigatons too, depending on how aggressive they are. So what we're looking for is actually some partners that are very aggressive, that have specific values, and then we can actually input those calculators before we launch it in North America. So that would be something I would ask for any help if there's anybody that really is focused on reducing or getting those values. We can get you that data.
Great.
And the nice thing about that is a lot of it's stuff they're already doing. So if they're already saving energy, they can input those values and then they can honestly say, yep, part of our sustainability effort, we've dropped this much carbon.
Wow. So are you hearing from our North Dakota oil and gas producers and our midstream companies?
I've focused with a couple buddies I visited with, but my area of responsibility is all of Western United States. So I cover North Dakota to Louisiana, out to Hawaii and Alaska. So I can connect the dots with the folks. I've got a guy starving for this information with whomever knows what the operations are, like how you guys calculate your carbon, and that will satisfy federal guidelines. And then we can simply provide you all those dashboards.
Wow, fantastic. So because you guys have funded the legislature has funded the Clean Sustainable Energy Authority, that I would think those folks would be super interested in it. And there's a number of our operators that would be interested. So I'll make a note of that. Thank you, Travis.
Yep, thanks, sir.
So my last slide is.
Lynn, can I ask a question before you move on?
Yes.
Sorry about that. So on pipeline within the state, so this carbon pipelines, if they just run within the state, are they subject to federal approval and federal regulation, or is it just purely state?
Great question. And as long as they stay intrastate and don't connect to an interstate pipeline, then they are subject only to the Public Service Commission siting. There would be some PHMSA safety requirements on the CO2 pipelines, but nothing in the permitting phase. So their entire permitting would be state permitting. And that's why we're excited about this one that you can see here that I'm running my mouse across. Is there's actually already a designed, a concept route and pipeline design for the point in time when it becomes economic to move, for example, Project Tundra from pure storage or the Summit CO2 from pure storage to enhanced oil recovery as to a intrastate pipeline that could move it to potential enhanced oil recovery. And of course, once you start building that, and if you maintain this pipeline that goes to the north, all of a sudden you begin to see that you've got access to most of the Bakken resource as well as the legacy assets. Since our Williston folks are hosting us, let's kind of start in that corner of the state. Obviously, we expect to stick with oil and gas, coal generation, wind farms, ethanol, hydro, refineries. We'll talk about carbon utilization and storage in a minute. But let's talk about natural gas, minerals, and data centers for a minute. So there are two projects west of Williston that are being funded by CC dollars. That's Clean Sustainable Energy Authority dollars that are in FEED studies that are progressing very rapidly. One is a gas to liquids, which ultimately could consume 500 million cubic feet a day and turn that into about 48,000 barrels a day of ultra low sulfur diesel, which, if you've been listening to the news, we have a diesel shortage now because of the administration policies and the way we've mismanaged refining in this country. But that's one of them. The other one is biodegradable plastics. And those are made from natural gas in a process that uses salt water, natural gas, and a type of algae to make biodegradable plastics for straws and for dining ware and other uses. So two great projects that are looking at the Trenton Marley Crossing area. It's somewhat obscured here, but in answer to Travis's point, CC has also funded a project to start processing Bakken produced water. And there's a lot of produced water in that area. So we're working with those folks on that project. Initially, they looked at just recovering lithium, and that did not pencil out economically, but they have discovered through their work with Bar Engineering that they can also recover sodium. There's a lot of sodium, and make sodium hydroxide, recover the chlorine and make hydrochloric acid. And between the combination of those three products, it becomes economic. So this initial test plant is going to be focused on sodium hydroxide, hydrochloric acid, and lithium. Two of those are used extensively in the Bakken oil fields, and the lithium, of course, is used in batteries. So it looks like our produced water contains the minerals necessary to move this thing forward. And so that project should be moving. It's already gone through the research phase and the pilot plant phase. It should be moving into a commercialization with the CC monies. If we move out just a little bit further, we're still looking at petrochemical plant, probably in the Berthold area. And we're looking at salt cavern storage for products beginning down by Watford City, but also we think we're going to need salt cavern storage in Williams County for petrochemicals and in Dunn County for the hydrogen hub. So we're going to be approaching the legislature to fund the next phase in the salt cavern storage. We cored a well down by Watford City, got very good results in terms of the salts that were cored. And so now we want to move forward with a state-funded project to actually construct a salt cavern and prove that we can do this in North Dakota. So that's this project here. As far as data centers, you've got one going in up in Western North Dakota. Why data centers? Because when you have this mix of electric generation in the state of North Dakota, you start to see that there's a lot of days when you have surplus electricity and a lot of days when you have to fall back on the reliable, affordable coal-fired and natural gas-fired. And so you don't want to build excess capacity or too little capacity, but on the days when you're generating excess capacity through the wind in particular, and if we go to any solar, then the best home for that is a data center that can scale its electric use up and down. Before I leave the minerals area, so we talked about minerals, and I don't know why that star got obscured out here, but we're talking about mineral recovery from produced water out in the Williston area. We also have frac sand being mined at Denby, and frac sand permits for mining. It hasn't started up yet down at Hayes and Stanton in those dunes. And then finally, in the minerals area, we are, well, that's where that star went. We actually have significant critical minerals, and we're looking at the next phase of our critical mineral exploration project in Slope and Billings and Golden Valley counties. We have discovered 4 to 5 times the what DOE considers the economic threshold for some of the critical minerals like gallium and some of those that are used in electronics. And so we want to move forward with the next phase of actually sampling some of those formations. And of course, natural gas utilization. We're still trying to work on the gas pipeline to the Red River Valley, which would allow us to pick up a fertilizer plant and potentially a corn milling plant at Grand Forks, and the beet processing plants and ethanol plants down the Red River Valley. So between all of those natural gas value added projects, we can pick up about half of that shortage in terms of natural gas utilization, which means our work certainly isn't done. But we're looking at converting spirit wood over to natural gas. If we bring that off of the One Oak pipeline, as you see mapped here, then that opens up an additional 250 million a day of capacity on the One Oak pipeline. So we can easily push past half of that natural gas limitation that we have. And then with the carbon capture, utilization, and storage, you can see all of these projects in central North Dakota going to CCUS, and then ultimately, as economics change and as the storage versus EOR 45Q credits play out, that carbon becoming available for enhanced oil recovery across western North Dakota. So I made a mistake. This is the potential ethane to electric power plant at Epping, and this would be the petchem plant at Berthold. So again, the vision for North Dakota energy 10 years from now is vastly different than what we have today. Huge numbers of high-tech jobs, infrastructure to be built, value-added natural gas, carbon capture and storage, recovery of minerals from produced water, data centers, salt caverns. I know that the propane marketers are looking at this salt cavern project. They would like to turn western North Dakota into a regional hub for propane storage. Ever since the Cochin pipeline was converted, we don't have a pipeline bringing propane into North Dakota. So all of our propane goes into a natural gas liquids pipeline at Sidney, Montana, goes all the way to Kansas. It gets fractionated out in Kansas, comes back up a pipeline to Sioux City, Iowa, and then gets trucked back to North Dakota. And that's making little to no sense to most of our propane users. And so in conjunction with this salt cavern project, we want to look at potentially storing propane in salt caverns to make western North Dakota a regional distribution center for Montana, Wyoming, North Dakota, South Dakota, and southern Minnesota in terms of propane distribution. So it's almost limitless. It's a little bit mind-blowing when you start to try to process it all, but the future is incredibly bright. So when we look at economic development over the next 10 to 20 years for North Dakota, we've got about a 15 to 20 year drilling inventory to drill out the Bakken, followed by at least 2 decades of enhanced soil recovery. And when you add to that the desire to put gas to liquids and petchem in western North Dakota, and the geology and the interest that we have, we've got the capacity to really grow the energy production pie in western North Dakota, and to share with the East. But you can see that really the vast majority of that growth is central and western North Dakota. So that is all of the information that I had. We still have a few minutes. Wow, we're running out of time. We've got a few minutes for a few more questions. And for me to say thank you for hosting me this morning. I would love for you to be able to show this map. I'll get it corrected because I see a couple of errors on the map. I'll get it corrected and send you a revised PowerPoint, and then I would love for you to be able to share this with the people around Western North Dakota, so they get some idea of what the vision for Western North Dakota is in terms of economic and energy development.
Okay, that would be awesome. I do see here we do have a question in the chat that came up. Is the Davis refinery continuing to progress?
The answer to that would be no progress at this time. I contacted the health department and we talked about whether they might extend the permit for that, and they're working on that right now. They haven't made up their mind, but the water and air permits are at the point of expiring for that plant, and so yeah, there is no progress on that proposal at this point in time.
And Lynn, this is Representative Richter again. Just a quick question about workforce. Is the trying to drive workers up from down south, does weather play a major factor in that, or are there other conditions that the companies are keeping track of? And if so, are they sharing that information with Commerce to get help on the recruiting? Or is it just simply weather is such a big factor to overcome?
Yeah, great question. So I would say it's probably dominantly weather, but also the fact that the Permian Basin is in a much higher growth and sustainable mode, and so there's little to no incentive other than to increase their salary to come to North Dakota. So I think it's dominantly weather, but they have the same job opportunities or just as good in New Mexico and Texas. And so they're just not incentivized to move to North Dakota. So it is largely weather. And again, you know, I think there might be a few people migrating back, but largely, dominantly, I really believe we are going to have to grow our own workforce. We're going to have to really focus over the next 2 to 3 years in growing our own workforce, and we've got the time to do it. You know, this whole vision plays out over a 10 to 20 to 30 year time period, and you know, a lot of these proposals for Western North Dakota are 2 and 3 years out. So we do have that opportunity, as long as we don't you know, sit back and not make the push to really push it forward. Well, once again, thank you very much for the time you spent with us this morning.
Thank you, Lynn.
I hope it was useful. Thank you for all the questions and the conversation.
Thank you.
Well, on behalf of RED, we want to thank everyone for your participation and your attendance, and we hope that you found this presentation very useful, engaging, and insightful, and that there's some big takeaways that'll benefit your business and your job. And Mr. Lynn Helms, again, we want to thank you for your contribution and taking the time to put this presentation together, and your subject matter expertise and the value that you bring in being a champion for North Dakota. And we look forward to doing this again in the future with an update. For those that's remaining online, if your colleagues have missed this, please know that this is recorded and will be posted on our website in a few weeks. So if you're interested in sharing and seeing this recording, or becoming a member, learning more about RED, and interested in seeing upcoming events that RED has to offer, you can visit our Western Region Economic Development website. That is rednd.com, WREDND.com. Again, That's WREDND.com. Well, thank you all. Enjoy the rest of your day.